Welcome. Today's quick video is going to be a quick review on DSCR loans for real estate investors in the Fort Myers area. If you have questions, please visit us 7 days a week at DSCR Loan Source or give us a call. First, we're going to look quickly at some of the benefits for the DSCR loan. Of course, DSCR is a debt service coverage ratio loan that has become pretty popular in recent years with real estate investors, especially in Florida, looking to purchase rental property with minimal documentation hassles. Of course, the main draw with DSCR loans is that they do not require any income verification, employment verification, and there's no debt to income ratio requirements that come into place with your standard conventional bank loans. DSCR loans do not require any tax returns, pay stubs, W-2, or again, any employment history. This, of course, is often the primary barrier for many self-employed investors, especially when it comes to documenting and qualifying just based on tax returns. So DSCR does eliminate that entire need really for income documentation. Mainly, the investor is going to qualify more based on their credit and the actual cash flow of the property, which we'll look at in just a second. Other advantages with the DSCR loan is that investors can close in the name of their LLC or Corp, which is often something that's not permitted on standard conventional bank loans. You can also have an unlimited number of property. Again, something that's a restraint on conventional loans where they can often limit the active loans to 10 on conventional loan products. And DSCR is also great for investors that may have a short-term hard money loan that they need to refinance out of. DSCR does not have any seasoning requirements for the property. Again, something that many conventional bank loans require a 12-month seasoning on the loan before they are eligible for any type of refinance. So that's something also that DSCR, that is an advantage for the program. First-time investors, they are eligible. And again, this applies to any standard single-family condominium and multi-unit rental properties, and of course long-term and short-term Airbnb type properties are all eligible. DSCR loans, because of the streamlined process, there are drawbacks with the program that investors should be aware of. Of course, there's good and bad with all mortgage and loan options out there. But DSCR is restricted, of course, only to investors in rental properties. There's primary homes are not eligible for the program, and some non-warrantable condos, depending on the situation, those can be on a case-by-case basis. DSCR loans, they do have a prepayment penalty with them, generally 5 years, with the option to reduce and lower the prepayment penalty to 2 or 3 years with the program, but that is a part of it. The interest rates on DSCR loans are typically going to be 1 to 2 percentage points higher when compared to a conventional loan. However, they're often greatly lower when they're compared to alternative hard money options that many investors use. So it's kind of in the middle. It's maybe not quite as low as some of the conventional loans, but again, something to keep in mind with conventional loans, most of the rates you see published and advertised day to day, that pertains to a standard primary residence purchase. So when you call a lender or bank, and then by the time you add on the adjustments for an investment property, the rates will be higher. But DSCR typically falls, again, maybe a point or two, depending on many variables like the actual DSCR on the property, the coverage ratio, the loan to value, and of course, the investor's credit score. investors will need to document cash reserves when it comes to DSCR. The gifts and that's all permitted though for your cash reserves. And again, cash reserves are just the amount of money that you have left over after the down payment and closing cost obligations are all satisfied. Now, again, the debt service coverage ratio calculation, this is the primary factor with DSCR loans. And it's very simple. You're basically just dividing the net operating income by the debt service or the mortgage payment. The mortgage payment, when we say mortgage payment, that should include the principal, interest, taxes, homeowners insurance, and any homeowners association fee if it's applicable for the area. That would not include the monthly utilities or property management fees, lawn care. Those type of things will not be included in the coverage ratio. But again, for coverage ratios, lenders typically like to see above a 1 coverage ratio. 1.25 is considered good. And with the coverage ratios, that means you're making more renting the property than what your debt service or your monthly payment is. We do have options though that are available for negative DSCR down to 0.65. Options like that, of course, do require a greater down payment. So that's something to keep in mind. Just a quick calculation here. Again, it's just simple division. Let's say there's an investor buying a rental property in Cape Coral. The rental income, $3,000 a month, divided by, let's say, the debt on the rental property. The debt service is $2,400 a month. So again, simple division in that case, they come up with a DSCR of 1.25. And that just simply means that the rental property is generating more income than required to pay the loan. And that's always a good thing. The higher that number, 1.25, 1.3, 1.5, the higher the number, the lower the risk it is to the lender. And of course, just like any loan, the lower the risk is going to mean the better the terms, the better interest, lower interest rates, more flexibility as far as the terms go, and the down payment requirements. The purchase loans are available up to 80% loan to value. Again, when we're talking about DSCRs that are 1.25, like this example. Lower DSCRs that are maybe a 1 or below, those again can require a little greater down payment. And keep in mind that there are refinance options, both just standard refinance and cash out refinance options that are available up to 70%. But investors surely want to be mindful that these program requirements, especially in the current market, changing market that we're in now, these requirements can change week to week or month to month. So it's always a good idea to refer back to the website and just check there on the website, and it'll always have the latest and greatest requirements as it pertains to down payment and credit score requirements. That's a basic recap. If you're an investor, again, if you have questions, give us a call at the number there or visit us again at dscrloansource.com. Thank you for listening.